Today's Animal Spirits is brought to you by Future Proof, which is coming up very soon. It marks the end of the summer, but it's a heck of a way to end the summer. It is our financial festival in Huntington Beach, California, September 10th through the 13th. Everyone is going to be there, yours truly, us included. It's a great way to network, to hang out, to have fun, to learn about the latest trends in asset management and wealth tech and all that sort of stuff.
Plus, I think last time you found the best fish tacos I've ever had in my life at a place right down the street from the festival.
Those were like the Antonio Banderas gif.
Right?
We'll definitely go back there.
Yes. I don't remember the name of the place, but there was amazing fish. And fish tacos just taste better when you're in a nice place like California. I was blown away by just the scenery of that place. People always talk about how expensive it is to live in California, and they may not agree with the politics there and stuff, but like you go to California and you realize, oh yeah, that's right. This place is amazing. That's like the scene of the beach right next to all the stuff going on and the interacting and the drinks and the conference talks and all that stuff. That part of it is what makes this thing really special too. Just the scenery's awesome.
Yeah.
So futureproof. .advisorcircle.com.
Say that one more time because I just sorry. Go ahead.
Futureproof.advisorcircle.com. I give you props for not cutting me off last week, and then look what happens already. Welcome to Animal Spirits with Michael and Ben. Michael, I'm a kind of a sucker for the aphorisms in the market. Buy when there's blood in the streets. Be greedy when others are fearful. All these types of things, right? The ones that just roll off the tongue. I think if they sound better, they just work. Like the trend is your friend. These types of things. Except in the end, don't fight the Fed is one that has caught on. Is a good one, obviously. And I think in the 2010s, a lot of people learned that one the hard way. It's not working this year. Don't fight the Fed is broken. Is it?
It's a great point. Do we retire it? Too early. Maybe it's just on a hiatus.
That's so. I was just looking at the biggest stock in the world, which is funny to me. I wrote a piece this week about how contrarians are usually wrong based on what we were talking about last week. And it's funny to me that Buffett is the one who has the greedy and fearful quote, and it's wait for the fat pitch. It's just hilarious to me that his number one holding is Apple. Buffett's number one holding is literally, but that's the thing is he didn't fight the trend, right? He went with it instead of being, So I think sometimes the quotes of his are misconstrued for what he actually does. Like he didn't like beat his head against the wall and say, I'm going to buy these 3 PE stocks that, mine iron ore or something. I'm going to buy the biggest, best company there is. And the Fed is raising rates, and they said they're probably going to still raise, twice more this year? And Apple is up 50% this year. The whole fight the Fed thing, it's one of those things that sounds great, but if you ever had an ironclad rule like that, I guess maybe my point is there's no ironclad rules in the markets.
Well, no, certainly not. Hey Ben, I got to ask your background. It looks like you're in a bunk of a summer camp or like some sort of shed. What's going on?
I'm in a storage room. This is kind of my makeshift storage room / gym, and it's the only place I'm at home. The only place I could find a plug-in so I get hard Ethernet cable so I don't have a delay with you. We've done shows with delays before, and I know it can throw you off. And so I'm taking one for the team here, and I'm podcasting from the basement.
I appreciate that. I was thinking about Apple in preparation for the show.
I did hang some stuff on the walls though. I tried.
Oh, it's a man cave?
I got weights down here. That's it. A TV. That's about it.
Sure, sign that's a middle-aged thing.
It's not really a man cave, but my gym is free weights in the basement.
Do man caves even exist in real life? Sidney Fife? What was his name for My Lovely Man?
Oh yeah. His man cave in his garage.
No, was Sidney the main character's name? No, that's
Jason
no,
Segel,
Peter
yes.
Clavin. Anyway, that guy has an all-time man cave, which is neither here nor there. But
you can't have a man cave when you have kids. I think when you have kids, my office is the kids' playroom. I lost an office to the playroom. That's why I'm in the basement. The kids take precedent over me.
Well, also, you need property.
True.
A man cave is a rich man's toy. All right. Apple's market cap, it crossed $1 trillion in August 2018 for the first time. There was no shortage of articles saying that this is the top, right? It would just be poetic if Apple crossed $1 trillion and then, the market got rugged. Well, since then, It has passed just last week 3 trillion. However, so the market cap is up 3x, but an investor's return is up 300%. So market cap's up 200%. The return is up 300%. How? They bought back so much damn stock and paid a dividend the entire time.
So how many other companies do we have that are a trillion now? Because Nvidia's a trillion now. Microsoft, Amazon. Is Amazon still a trillion?
Oh
Because
yeah.
Nvidia is.
Google, Tesla. Is Tesla? No, I don't know. Facebook's not anymore. Well, I'm sure on its way back. That's a good question. How many?
You're right though. That was Tesla's not. They're 900, but they're pretty close. There were so many moments of the top thing, and obviously we had a bear market, but I think the thing that has got to be the most surprising to people who've been predicting a crash for 15 years or whatever is the fact that it didn't really feel like a system-wide reset of a bear market. It felt like a run-of-the-mill bear market. You know, it wasn't. This one's not going to go down in the history books. Like the inflation and the economic story, that will go down in the history books.
Yes, it will.
The stock market is so far down the totem pole to me of things that have gone crazy in the markets these last 3 years that a 25% correction in the S&P doesn't really, I don't know, that to me, that's going to get lost in the history books, I think.
Well, yeah, it's not. Yeah, I agree. It's not like a top. It's not like obviously a 29 or 07 or anything. However, we were talking about this a couple of weeks back, or maybe a couple of months ago. The duration of the bear market was on the longer end of things. What was it? 250 days. I think I'm making that up, but it was. If you know that, remember that chart that we showed? Just the length. It was not insignificant.
15 months, basically, right?
Bespoke tweeted, talk about emotional through the fourth to last trading day of the first half. The NASDAQ is on pace for its third best first half on record. Last year was the second worst at this point. We have spoken about a book in the past called A Very Good Year. Is that the name of the book?
Yes.
And it looks at the top 10 years in the stock market. And most, not all, but most of them followed a very bad year. So from that very, very simple mental model.
Well, you remember what the best year ever in the Dow is, right?
The best year ever for the Dow?
1915. So in 1914, from World War I, liquidity in the stock market basically dried up and the stock market closed for 6 months, literally closed.
Right.
And 1915, after it opened back up, was the best year ever. The Dow was up 85%, I think. Yep. And then after World War I, it started, which is, I guess your point, it's counterintuitive.
This, and speaking of counterintuitive, I think one of the things that a lesson that we learn over and over and over again is, and it's so obvious that I think sometimes we don't talk about it enough. It's gone from overrated to underrated, is that nobody knows anything. And investing with your emotions or what you think might happen, it just never works. Yeah, sometimes it works. But generally speaking, what I'm getting at is when everybody went risk off, the market said, F you, we're going risk on. Right? Like in December, January, oh my God, I could get 4.5%. Oh my God, now I could get 5% on my cash. And it made sense and it makes sense. And I did it. And a lot of people did it. And it doesn't mean, I'm not saying I swung to cash, but it was attractive, right? So my point is you have to have some sort of discipline. It could be loosely defined. I'm not saying buy and hold index funds is the only solution, although it's a good one, but you have to have something that you come back to where you're not just, flipping out, up, down, sideways, excited, scared.
I think the other thing is people think that the market should do something. Like the interest rates went up, so the market should crash. And the Fed did this, so the market should do this. And inflation, I think that's a hard thing to follow too, is that you get your mind attached on these narratives that like, well, the market should be doing this because this is what I learned. And if it's not, here's one that actually did follow through though. We talked about at the beginning how don't fight the Fed kind of doesn't work anymore. I think you talked about this. What's the after the elections? It's what's the election rule?
We spoke about this a lot. And so I'm not a big seasonality guy, but I do think that there's something here because not only because it's 100%, but there is a reasonable explanation for how many midterm elections have there been.
Right. So someone pointed this out on Twitter. They said, hey, you guys mentioned this on the show, time to update it because what's the rule after midterm elections? A year later or something, it's never been down. And we had Sean run the numbers again, and I think from the midterm elections, stocks are up 15% or something. And I think when you said it at the time, I kind of poo-pooed it and laughed. But I don't know. Maybe there is something
No,
to
because
people freak out about elections and
I'm fairly certain that I used Dietrich's data on this because he's a big seasonality guy. But the reasonable explanation that I'm thinking of is markets like certainty, right? And I know that politics shouldn't drive your investing certainly, and I don't think politics is the end all be all. In fact, I think it's very, very, very low down the list of what drives the market. But in this case, and this won't hold forever, right? So I'm not saying like bet the farm on this, but it's what is it, 20 out of 20?
it works better than sell in May and go away. Is that right?
Kotu had a great presentation with some charts that I wanted to talk about. They showed the EM Cloud Index, which is 68 companies, and they showed the percentage growth in net new
What
ARR.
would that be, like Alibaba and those kind of companies?
Datadog, CrowdStrike.
Oh,
I
yeah,
don't know,
okay.
like-
I thought you meant like emerging markets. What's EM?
No. I guess I threw you off. Me off
Okay.
too. Probably like Snowflake and whatever.
Okay.
Anyway, so it's showing the percent growth in net new ARR. And from 2017 through 2019, it was doing around 20%, pretty consistently. So a little higher, a little lower, but that was a trend line. And then pandemic happened, and it basically, went nosedived. Pandemic, economy reopened, the switch to work from home, an infusion of liquidity and stimulus and business spike, and then it went to 50% growth. And then it has since crashed to the lowest level, going back to this chart, 2017. And the point is this, and again, it's a point we've made. Another thing that went overrated to underrated or just got sort of lost in the shuffle, the pandemic changed everything. It brought forward years of demand, and then it made those comps completely impossible. And investors rationally overpaid for the growth and are now correcting the other side. And it's tough.
Looking at this chart, it almost does. The moves in these stocks almost make sense. It was like, I know it was a big speculative thing that happened in that 2021, 2020 kind of bubble period, but the fundamentals did really go up that much, and they did really come down that much. So it's almost like the run up made sense and the crash made sense. It kind of followed fundamentals.
Yeah, totally. And then they show market is demanding profitable growth. So cumulative returns from 2022 to today. They break it down by low PE, and again, this is Kotu US Internet Universe with $1 billion market cap. They show low PE, high PE, and money losing. And the money losing companies, it's basically down 30, down 44, down 58. And then if you show the value recovery, so from the trough to where it is today, the low PE internet companies are up 33%, the high PE are up 28%, and the money losing companies are up 11%.
So this is
the market is also rationally punishing. That era of free money is over. The runway is done. That's it. No more. If you're losing money and you can't turn it around, you're done.
So this chart kind of shows those higher quality companies like Apple and Amazon and Google. They didn't fall as much, and they're rising much higher on the recovery too.
Correct.
Interesting.
Nate Garasa, we haven't done flows in a while. Let's talk about it for a second. Top 10 ETF inflows for the first half of 2023. Number 1, VOO, which is Vanguard's S&P 500. Number 2, this is surprising.
That is surprising.
TLT, which is a lot of duration. How is this done year to date?
Long-term treasuries.
I think it's up a little bit. Let's take a look, see. TLT.
It's not like it's knocking the cover off the ball.
It's up a little bit, 5% or so.
Yeah, but that's surprising.
That is surprising, right?
People want to. So does that mean people are betting on a? Is that an inflation bet or a Fed bet? Like inflation's coming down, so I'm going long duration.
Maybe it's a bet on I guess the Fed being done raising and
JEPI number 3, which is again probably our most asked ticker email that we've gotten from people. I remember one guy like a year ago emailed and said, "Talk me out of putting all my money into JEPI," which the question we were getting like 3 years ago was, "Talk me out of putting all my money into 3-time levered NASDAQ 100." And then last year it was the covered call, but that thing's still bringing in money.
And that's lagging the market pretty substantially, which is not a surprise given the strategy is literally capping upside when things go straight up.
It's also interesting if you look at this, 8 out of 10 of these, or maybe 7 out of 10, are just the index funds, VOO, VTI, SPY, and then BND, AG, IEF, and TLT. It's just huge stock and bond indexes, and then a couple of specialty funds.
The only outliers are JEPI, Qual, and SQQ. Is that 2 times Nasdaq?
Is that short Nasdaq or long?
Ultra Post short. Oh shit.
Wow.
How about that? That's interesting.
That's not a winning trade.
Top ETF Outflow. It's an ESG fund. I wonder if this is a model portfolio thing or if it's, who knows?
It could be because it's a lot of money.
Yeah.
People are still buying index funds. I don't think
Yeah.
anything is going to come along that changes that. I know that there's a lot of people who are crusading against index funds. They cause market to do this. This whole wave of money just constantly flowing index funds through 401ks and IRAs, and I don't think that there's anything that ever stops that. And I think it's only going to get slowly but surely larger over time.
Yeah.
I don't know what would have to happen to stop index flows from doing this.
I don't know. Just a nuclear bear market. But even still.
People have still been investing in the bear markets.
All right, Ben. Betterment, switching gears. Betterment did a study of retail investors. I think it was 1,200 investors in here. What is the most trustworthy source for financial advice? The company found that financial advisors were the most trusted source of financial advice, with 67% ranking in top 3, which makes me happy. And this makes me even happier. Social media influencers were the least trusted, with 22% ranking it in the top 3.
Okay. Friends and family. That's a little too high for me. But the thing is that's probably
Friends and family's number 2. Yeah.
But that's probably the way most people do this, and it's probably some of the worst people you could ask advice from. Don't you think?
Depends.
That's a huge crapshoot of asking.
Totally.
I mean, we talk about this stuff all the time, and I don't like giving financial advice to friends and family unless they like really casual advice, right? Like that's the thing with when you talk to friends and family about financial advice, it's usually casual.
You definitely get even more squirmish than I do. So I had one of these experiences over the weekend. Funny you should mention this.
Okay.
Saturday morning, Kobe was playing basketball with some of the boys, and I was with 2 of the dad friends. And they asked me what I did. So I told them. And the first question, as is always the first question, what stocks do you like? Right? So I'm like, yeah, I mess around with stocks. I love picking stocks, but it's just, I do it for fun. It's a hobby.
Wait, you didn't brag about some of the bottoms you've picked lately?
They're like, all right, well, which ones do you like? I'm like, no. I mean, like, listen. I'm like, well, what do you guys do? So one of them told me that that he bought a lot of tech stocks before the pandemic, sold them at the bottom, and has been depressed about watching them run up. And when he sold them, he put all of his money. I don't know if he's put all of his money. I'm sure it's not all of his money, but he put all of the money that he had in the stock market. He put it into a company called Neo. And I'm like, well, why did you do that? And he's like,
electric cars, or what is that one?
Yeah. So he's like, I don't know. I thought it would go up, and then it didn't, and I just never sold. And he's like, well, what do you actually do for your own money? I'm like, well, I automate it. So I invest in my 401k, and then aside from that, I invest every 2 weeks. And he's like, into what? What do you like? So I'm like, I just index funds, and I just want to get the market return. He's like, well, how is it done? How is that done over the last? I'm like, well, the market's done really well. He's like, okay, well, how is that done? I'm like, well, I just own the market, so I've done pretty well. So anyway, my point is this: I think we take for granted that people generally, and listen, listeners of the show obviously are very financially literate, but most people just don't know anything. Yes. And the other guy who I was talking to, he's like, yeah, I don't. He's like, aren't all the financial advisors the same? Like, I spoke to one and didn't really know what they were talking about, and I just didn't really do anything. So I'm guessing that these 2 dudes have more or less all their money just sort of sitting in cash and really have no idea what to do and don't want to talk to an advisor for whatever reason. That is
probably a more regular person scenario than the people who listen to our show.
Totally.
Follow this stuff. By the way, Neo's down 84% from the high.
Oh, I don't think he bought it at the high. But maybe he did. But anyway, I think, again, I just think that I think that most people are like that,
Yes, unfortunately, because it is hard, and it's hard to know who to trust. And the problem is the best salesman in the world is going to make you trust them, and they could be a moron, but they're really good with people, right? And that's the hard part about knowing who to trust with anything in life, right? All right. inflation still going in the right direction. This is from Fed Woj. Powell Fed is focused on 3 baskets of core inflation. Here's what happened to them in May. Core goods, 3.2 versus 2.1 in April. That's a little higher. These are 3-month annualized rates. Housing, 6.4 versus 7.2 in April. That's coming down. Core services ex housing, 3.9 versus 4.4. And then core PCE is 4.1 versus 4.2. We're still going in the right direction. So I still think the Fed could be heroes here if they want to.
Yeah. Who'da thunk? Carl Quintanilla tweeted, corn hits lowest since October 2021. Soybeans lowest since December 2021. Dude, it's just been one thing after the other. Like the war in Ukraine was certainly going to lead to global inflation, a surge, which it did, by the way. It did. And then it was, I don't even know what came between that, but somewhere in between that, we had the regional bank things, and it was just Fed just aggressively raising. You had all these tech layoffs. Like the market, the economy just absorbed so much.
So if you use commodities as a good inflation hedge, which they are, you had like, I don't know what, an 18-month window, because the DBC is the Invesco commodity tracking one. That's a good ETF I track. It's on 25% from the highs.
It's flat since the invasion.
Wow. Yeah, that's hard to believe. This is also hard to believe. Who tweeted this? Jordan Wiseman tweeted this, and 2 charts that he pulled, one from the White House, one from Joey Politano's Substack, which I like. Basically,
do we know this White House data is real? Do we know this White House data is real? I'm just asking questions.
It's real.
I'm kidding.
It shows U.S. versus other developed countries: Italy, UK, Germany, France, Canada, and it shows we have the lowest inflation about all these developed countries. And then it also shows GDP growth. Same countries, we have the highest growth. So we have out of all these big developed economies, we have the highest GDP growth, the lowest inflation. How the hell did this happen?
Those numbers don't, something's a whack, Ben. Can't possibly be.
This is another one of the, obviously there's Europe was more impacted by the war stuff. I honestly think if you erase the war situation, which obviously a lot of people would love to have happened, if that never happened, because it's been such a tragedy. But if you erase that situation from the economic data, inflation was going to be transitory. If you take that bump up from the invasion, I think inflation, in hindsight, looks transitory. Fair?
Yeah, it could be.
I don't know how to explain this. The fact that the U.S. has the highest growth and lowest inflation, it doesn't make any sense. If you're in one of these other countries, you got to think, what did we do wrong here? Should we have spent more money?
The best recession ever continues. May durable goods. This came out last week. Up 1.7% versus negative 1% expected.
Hand up.
May new
durable goods. No clue. What does that mean?
Durable goods. You know what they are. It's like stuff you buy at PC Richards.
I don't know.
Washing machines.
What's PC Richards?
Okay, PC Richards is probably regional.
Lowe's.
Clothes.
Lowe's, Home Depot, that kind of place.
Oh yeah, no, it's exactly. It's stuff
tangible
that
products that can be stored or inventory.
It's stuff that you don't replace often, like your dishwasher, your stove, a refrigerator.
There you go. They have an average life of at least 3 years. See,
all right, so they're goods that happen to be durable. It's a great name. Anyway, May new home sales 763. You know, that reminds me of a great line from Wayne's World. It's been a while since I quoted Wayne's World.
You quote Wayne's World like once every.
The guys go up to the concert. And Meatloaf is the bouncer. Do you remember that?
I'm gonna have to rewatch it because you quote it all the time, and I don't remember any of the lines from it. And so it's been 20 years since I watched it, probably.
So Meatloaf opens the door, and they ask who's playing, and I can't remember the first name, but they said, and the Shitty Beatles. And Wayne goes, the Shitty Beatles, are they any good? And Meatloaf said, no, they suck. And then Wayne said, so it's not just a clever name.
Okay.
So durable goods. There you go. Perfect name. Perfectly named. All right. May new home sales, 763,000, 675 expected. Consumer confidence is jumping. Not that I don't know what the bear case, but I don't even know what the bears would say at this point. It's got to be just wait, which I guess is like fair-ish. I don't know.
I think the goalposts have been moved to just wait. Monetary policy acts on a lag. That's what you're holding on to this point.
Which is true, but we're approaching bear who cried wolf territory. I'll give him another 6 months. Uh,
Isn't it always that
Renaissance,
though? Doesn't the bear always cry? The
yeah,
perma
Renaissance
bear always
Macro
cries bear.
Research. Quote, I think it's from Neil Dutta. You cannot talk about late cycle dynamics with housing turning up and inventories likely to follow. There will be no recession in the next 6 months, and it's increasingly likely that we're not seeing one in the next year either. Wow. Wow.
The housing stuff. I've been thinking about this. I feel like there's so much home equity locked right now because rates are at 7%, and so the cash out refinances have stopped. The HELOCs have stopped. People have always said like it's going to be a mild recession if we have one, and there hasn't been a really good explanation for it. I think it's just like, well, there's no big system wide thing that's going to bring us down, but I think housing is the thing that is going to carry us through the next recession and make it, if and when it happens, it'll be ultra short because if mortgage rates come down from 7 to 4 or 5, you're going to see a home equity line of credit and cash out refi boom unlike we've ever seen before. People are going to be yanking because the housing market hasn't fallen like people thought and the equities stayed relatively similar. I think we're going to see a massive refi boom when mortgage rates come down in the next recession. Like that's going to be the wave for the next to hold people through when the stuff hits the fan. Thoughts?
But didn't we just have a massive refi boom?
It didn't get as big as there wasn't enough time really.
Okay.
It wasn't as nearly as big as like what happened in the 2000s. I think because of the increase in equity and the money just sitting there for people, I think it's going to be the next wave. It's going to happen. All right, here's this made me a little worried, I guess. This is from the Wall Street Journal. U.S. single-family housing construction has rebounded recently thanks to historical low numbers of houses for sale. Talking about the things people refinanced during the pandemic and locked in low mortgage rates, and so they don't. And then this Tom Barkin, who's the Fed bank chair of Richmond, which is another like. When did they set up these bank chairs? The locations of them always kind of are screwed.
It was in. You ever read the book America's Bank by Roger Lowenstein?
I did read that. Oh, okay, good point.
Yeah.
I should. Okay. Tom Barkin says, I didn't fully anticipate how much the move in interest rates would convince people not to put their houses on the market. That's kind of got me a little worried that the Fed didn't realize, like, oh, if we let mortgage rates go to 7%, maybe people won't want to move because housing is unaffordable.
Yeah, maybe keep that to yourself, dude.
Yes. All right. Good news of the week. Labor market. Ethan Malik tweeted this. The good old days were much harder. In 1865, the average British worker worked 124,000 hours over their life, kind of like the US and Japan. In 1980, only 69,000 hours.
Nice.
Don't do it. Despite living longer, since then it has dropped by 6%. We went from spending 50% of our lives working to 20%. Pretty amazing. I think one of the reasons that we have so much that people complain about much more minor details in their lives, I think, than people probably did way back in the day. Back in the day, people didn't have any time to sit around and think about stuff and complain because they just worked all the time. And then they died young.
I read a book on this. Called The Comfort Crisis, which was exactly about what you just spoke about. And quality of life is up the billion X, but it's made us soft because there are less real threats to us. And so everything is relative.
Right.
And so I'm not saying that I want to go back or that humanity was, things were better in the 1910s. It just is. Right?
Yes.
We have more leisure, more luxury, less threats, more time to complain.
Right. There's fewer diseases or there's fewer ways to like be impaled and die. So like the way that have you ever read any of the books about how they made the buildings and the bridges back in the day and how there's just like dead bodies in these big cement pillars when they made the bridges and stuff because there was so like working conditions were so much unsafer.
Yeah.
So yeah. Anyway, good news of the week. All right, is the housing correction already over? This is from Yahoo Finance. Home prices grew for the third straight month in April, potentially cementing a recovery in values and reflecting a housing market that is sorely undersupplied. Case-Shiller was up 0.5%. I showed the drawdown here on Y charts. So it got to as low as 2.85% for Case-Shiller National Home Price Index. It's now, I'm using 2 decimal points here, 1.78%. It's coming up, meaning housing prices are going up. Is that it?
Could be.
If we see a 3% correction, I suppose if we want to add inflation, it's been a little higher than that, lower than that. I don't know, that's another brain breaker, right? Mortgage rates go to 7% from 3% in the housing market, and the housing prices go up 50%, and then they fall 3%. I think people are so desperate for housing market crash, it's probably not coming. Did you see this viral Airbnb tweet?
I did.
He talked about how the Airbnb collapse is real. Revenues are down by 50% in cities like Phoenix and Austin. Watch out for a wave of forced selling from Airbnb owners later this year in the areas hit hardest by the revenue collapse. And that got like 1 million views. It's got 17 million views the last time I saw it, and thousands of retweets. And people thought, oh, this is it. This is the thing. And then some other guy wrote back and said, this viral tweet, I'm going to fact check it. And no, the average trend is down 3%, not 40 or 50%. I think because the thing, so Logan Motoshami in his Housing Wire podcast talked about this. They asked him about it. They said, is this Airbnb collapse thing real? He's like, listen, I'm not an Airbnb expert, but if this was real, you would see it in the supply of houses for sale. There'd be a wave of housing on the market. And instead, we're seeing the lowest supply of houses for sale in history. So
Can I just ask a question? Has anybody fact checked the fact checker?
I don't know. I'm just going to go ahead and say that like it's impossible that you could lose that much money on these when everything has been going so well and people are spending so much money. I've not seen a fact check of the fact checker, but I'm
So the original guy is saying that all of the people that loaded up on homes,
yeah,
the Airbnb
they're
hoarders,
screwed and they're gonna have to sell.
yeah,
because they're losing money.
and yeah, just come on, just come on. And as two Airbnb shareholders, this is not. I don't even think this is not even necessarily like a stock. Well, I guess it would impact the stock if it was right, but it's more just like this guy's not talking about the stock. He's talking about much bigger things. He's talking about the housing market.
But my point is, people
and there's just no way. There's just no way.
No, but people wanted so badly for this to be true because I think some people just want, and I get it. If you missed out on it, I totally get wanting the housing market to crash so you can buy lower. But if
hey,
the
guess
housing
what?
market,
If all the people that bought multiple homes in the last 2 years sold them on Airbnb, you know what would happen? They would get bought. That's what would happen.
Right? And you'd see an increase in the supply of homes being sold or bought. And it unfortunately for people who are looking at it, hasn't happened.
All right, Ben. Not somebody. I'm sorry. The Financial Times. In New York, buildings are selling for less than the value of the land that they sit on. We are seeing prices lower than they have been in 20 years in absolute dollar terms. It comes from Will Silverman. He is a managing director at a real estate investment bank. And they show U.S. commercial real estate foreclosures by property type. And of course, office is way higher. There's been almost 30. The next is apartments, which is like 6. So it's all in office real estate, specifically within the commercial real estate category.
How hard is it to turn these offices into apartments? If they're really selling for less than the value of the land they sit on, why couldn't these be turned into condos or apartments?
It's not that simple. There's a whole like zoning type of thing. It's not like they could just flip a switch. But anyway, my point is this. This is definitely, I promise this is a not to brag thing. I'm up 50% or so on the SL Green stock that I bought.
I don't know. You've been bragging about it a little bit lately. A little bit.
No, I haven't.
A little bit. I got the receipts on Slack.
No, but yeah, but I can brag on Slack. I mean,
okay, fair. To your credit to you. You've bottom fished like 5 stocks in the last 12 months. Like, and and we always say like it's impossible to nail the bottom. You kind of had nailed the bottom like 4 or 5 times.
It's closer to 10, but no, but it's not credit to me. It's credit to the market. I said with Josh. Yes, I have gotten lucky. Some call it skill. I'll call it luck. But it only works in a bull market. Like if you're trying to catch bottoms in bear markets, you're like obviously. Okay, but anyway, my point is this. With SL Green, this is how markets work. The news is bad and it's not getting better. And the stock is up 50% off the lows. And if you contrast this with Netflix, which we spoke about last week, Netflix is flat over the last 5 years and it won. Right. If your thesis in 2018 was that, and we spoke about this, that guy, Buco Capital tweeted this, if your thesis what Netflix is going to win streaming, you were right and you made no money.
Right.
Conversely, this piece of shit, the news is bad and getting worse, but the stock is up 50% from the lows.
It's all expectations. Netflix had such high expectations built into it.
So that's how the market works.
Yes.
All right. Let's.
Do you even know what SL Green does? Is it just commercial real estate? Or
they own a lot of like AAA luxury buildings in Manhattan.
So this is a trade for you then, because obviously the fundamentals long term are horrible.
Yeah, it's not, I mean, I am probably going to be a seller soon. Yeah. I'm not looking to like get married here. Lordstown Motors. Remember that one, Ben?
Yeah, what was that one again? Was that a EV player or something else?
Which was the one where the dude rolled the truck down the hill?
Oh no, that was
Was that Nicola?
yeah, yes.
Well, Lordstown Motors came and went. Rest in peace and peace. I don't really remember what they did, to be honest.
Should this be the way to like? Wasn't this the case with when automobiles first came out in the early 1900s? There was like 130 different manufacturers, and 4 of them survived. Isn't that? I mean, there's not that many electric vehicles, but isn't that going to be kind of the same thing that happens here? You would expect a lot of these to go out of business and not work. It's a hard business.
Yeah, no
obviously.
kidding.
I was hoping my next car would be an electric vehicle, and I it's not. They're not cheap enough yet for me. I think they're going to be. Tesla keeps lowering prices. I was surprised though. Our car dealership guy tweeted a few weeks ago, "Hey, here's where you're finding deals," and he listed Ford on there. And I drive a Ford Explorer, and I called them up and I said, "Hey, I got like 10 more months on my lease. Sounds like you guys are having some deals. What's the story?" And my monthly payment only went up. Interest rates went from 3 to 8 in auto loans too, maybe 9 or 10. I thought my monthly payment would be way higher. It was 7% higher than I paid 3 years ago. CPI in that time is up 15%.
Yeah, not bad.
My negotiating skills allowed me to hedge inflation. How's
It's
that?
all relative. You're a good negotiator in Grand Rapids. Trust me, you get crushed in New York.
Hey, you use a car broker. You don't even negotiate. You have
Yeah,
someone
because
else do it for you.
I got destroyed. Speaking of cars, when I was in California last week, I sent you a picture of me and Chris. We used a company called Turo, which is like Airbnb for cars, which was
Wait,
awesome.
Did you learned about
Great
that one
service.
from your idea you had, right?
Huh?
You said I've got this great idea. I want to be
Oh,
able
that's right.
And so someone told us about that company. So you used it. And your middle-aged transformation was complete. You were driving a convertible with a Hawaiian shirt on, and middle age is here.
Wonderful service. It was like probably cheaper than Hertz and a much wider selection, and you don't have to wait at the airport. Yeah, it was really good.
But it was
really
all
good.
like higher-end cars?
No, not at all. Not at all.
Okay.
You could spend. I don't know how low it goes, but no, it's not high end at all. It's all over the place.
Yeah, car rentals is the kind of business where I don't think you ever have a really good experience at one of the chain places.
Oh, okay. I was about to say I had a great experience. It's TURO if you're traveling. All right. I got just before we started, I got an email from Rocket Money saying that my subscription increased for Amazon Kindle Unlimited. Guess what? I didn't even know that I paid for Amazon Kindle Unlimited. How about that? So it went up. Hi, Michael. You were just charged $11.99 by Amazon Kindle Unlimited. This is a price increase of $2. Well, good to know. I'm going to cancel this because I don't read, and I definitely don't read on the Kindle.
How much of a bear market is your reading in these days?
Like all the way. I actually got a book. The author is Jack Carr, and it's like an ex-Navy SEAL writing like I think a fiction book. And I thought to myself, you know what? Maybe this is like the gateway. Maybe this is how I get back into reading because it's fiction. The first book that I read on like my reading journey, it was 2008. And I remember because I remember where I was, and I was in an airport and I picked up The Pelican Brief, John Grisham. And I had so much fun reading that book. And I said, you know what? I should do more of this. So maybe, and then that led to a multi-year bull market in my reading.
You and I used to trade books all the time. Like I only read fiction now. I did get an early copy. William Bernstein has a new edition of The 4 Pillars of Investing coming out. And I got an early copy of it. And I'm excited about that because he's my all-time favorite finance writer.
So I've had this book on my desk for a long time.
Price of Time?
The Price of Time by Edward Chancellor. He wrote Devil Takes the Hindmost.
Oh, that's the interest rate book, right?
It's about the real story of interest. And I really want to read it. Like I really want to, but how? When do I read this? It's 300 pages on interest rates.
All right.
I did too many podcasts to read.
Yeah.
Anyway,
makes it easy.
Just my point is, I don't even pay for Rocket Money, but it's a hell of a service.
So it was nice to get the, I have to sign up for it. They emailed me about this and they said they're going to give me a free shot at Rocket Money and I haven't done it yet. I'm going to.
Give me a free shot. Oh, wait a minute. Because you still use a spreadsheet like an absolute clown.
I mentioned I use Excel still, and Rocket Money reached out and said, "Hey, give us a try. We'll give you a free try at it." And
I don't
I
even
haven't done
understand
it
what you
yet.
mean when you say you use a spreadsheet. You're talking about like big stuff, not like you don't like track your subscriptions, obviously, right?
No,
What do you?
no. But yeah, all my big monthly recurring bills, I have them in there, and yeah, I have a system. Don't worry about it. All right, last week we talked. You just mentioned Netflix. A good one from Lucas Shaw at Bloomberg. He's the guy who's always on Matt Bellany's podcast, The
Yep,
Town.
they're great.
So he shows Netflix versus Paramount, Disney, and Fox, and then Warner Brothers. And he said net income at the largest U.S. entertainment company has declined by more than 60% over the last decade. Basically, these companies trying to chase Netflix and get that Netflix multiple, that was never going to happen. They've just decimated themselves. Like the profits they were making in 2013, and obviously a lot of it is the movie industry has changed a lot. I mean, movies really are dead. I was predicting
Did
this
you
throughout the
see?
pandemic. I think movies are just like Top Gun.
Movies
Top
are
Gun
not
for
dead.
me,
Movies are not dead. Movies are not dead.
the movie theater is dead, man.
It's not dead.
It's
It's not doing
it's on
good.
life support.
I would say it's in critical condition. Maybe stabilizing.
You're like personally trying to keep it going, but it's no
I
one went
actually
and
haven't
saw
seen a movie in a
Indiana
while.
Jones. I think bombed this week.
It did 60 million. I think it's great. Oh, and speaking of, so this is one of my investments that has not worked out. Disney, which I asked a few weeks ago, is this just a value
Me
trap?
too.
Guess what I did? Guess what I did? I bought more. I told you I bought more.
Double down.
I feel like because this is like multi-year support right here, and but here's the other thing: if it breaks, I don't even know if I'm going to sell. I feel like it's too late to sell.
Doesn't someone have to come buy them eventually?
I don't know. I'm not banking on that. I don't know about that.
If I wanted to
I
sound,
just
if I
feel
wanted
like-
to sound really smart, I would say if we did a sum of the parts valuation here. I don't know what that means. I don't know how to do that, but if I did, it sounds intelligent.
Listen, this is like maybe keeping it too simple, just not overthinking it. Disney has a lot of problems, right? Like everyone, they're well documented. You're starting to see analyst downgrades. The stock is in a 60% drawdown. Do you not think we know? And sorry, if I could buy one of the best brands of all time here, when it's just a complete washout.
So getting back to the expectations thing, yeah, Josh sent us last week on Slack. One of the analysts said we're downgrading Disney and upgrading Netflix. It's like, oh,
Yeah,
great, thanks
bought more.
now.
Yeah.
But I think that's the thing is like the expectations that are built into Disney are so low right now. That's your upside.
Yeah, they're
you
in
would
trouble.
hope.
I know.
You would hope.
I know, and the market knows. We all know. Tough business. All right, real quick. There was I don't know where I saw this, but number of annual U.S. pedestrian fatalities. This is in the United States. Pretty horrifying. It is at the highest level it's been at since 1980.
So it went from 8,000 to 4,000 and back to 8,000.
Look at the next chart. U.S. pedestrian fatalities. Deaths of people walking surged 19% in just 3 years.
Is this people on their cell phones?
Well,
in their cars?
Yeah, but so they show you like states where it's most common, and
Michigan just put a
New
new law
Mexico.
in that went in. Michigan has a new law this week that went into effect that you can't look at your phone while you're driving. It's a $200 ticket if you get exactly.
But so that was the most common response. But they compared it with other countries, and we're way higher than everyone else. And guess what? There's not just cell phones in the United States. So I don't know what's going on, but I've become, since I saw this, I'm much more cognizant of it because I look down at my phone all the time when I'm walking, and it's dangerous, especially in New York.
Yeah, that's a New York thing. I don't know how people don't get hit more in New York with the way that people just fly through those intersections and the cabs and sticking out. And
Ben, know what I did this weekend? I did my annual power washing routine. And I got to tell you something. I love...
Power washing is a great dad experience.
Yeah, it's so much fun. I love an activity where it requires your full dedication. So, for example, I wouldn't say I love doing the dishes. That makes no sense. But I like doing the dishes and like cutting vegetables only because you're not on your phone. Sure, I listen to I listen to a podcast, but you're not like doing a million things. You're doing two things. With a power washer, you can only do one thing. It's too loud, so you can't listen to music. You have a task. You get the shit off your house, off the fences. I love it. It gives me a ton of joy.
The other great thing about power washing is that you see the start and the end. Like I did one of those college painting crews in the summer when I was in college for a couple of years. And the greatest thing about
wait. A what?
A house paint, right? You've seen those like college pro house painters. Like it's a bunch of college kids who run their own business and they charge way less because they're probably bad at it. So it was me and a bunch of college buddies that were on a painting crew. And we painted the outside of houses all summer. And the
Oh,
best thing
nice.
about that, yeah, I learned how to paint actually. The best thing about that is like you see your progress. It's right there
Yes.
for you to know how much you've got done, and it like at the end of the day, you see how much you've done, and like it kind of is like fulfilling.
Incredibly fulfilling.
That's what I like about it. All right, I've got a fireworks take. So the fireworks we're recording this on Monday morning because we're not gonna record on 4th of July. What are we, maniacs? And people are starting to light off fireworks already last night. I've done the whole spiel before about how I hate fireworks because like it wakes my kids up and it's bad for dogs and all this thing. Here's my other fireworks take. Like a fireworks show, like the towns and municipalities and stuff put on. Those are the same. Those fireworks have not improved for like 30 years. I feel like it's literally the same show every year. And so if you've seen one, you've seen them all. But the firework improvement for regular people, the dumbass who lives down the street or next door to you, those are like 10 times bigger and better. So we've given idiots the ability to do huge fireworks shows out of their driveway and like shoot off these it's like a war zone, but the regular ones they're still the same.
Is there a crypto ETF analogy coming?
I don't maybe. I just don't get fireworks. I feel like if you've seen one show, you've seen them all, and I just don't the downside of lighting off these huge mortar shells versus the upside is just it's the worst investment opportunity there is.
Well, I agree with you. I don't know that I would be.
I sound like an old man here. I don't care.
But I do enjoy. I'm on the complete other side of as far as I love fireworks. I enjoy it. I like seeing the kids' eyes light up. I like seeing my eyes light up. I just love it. I think they're pretty. And
they're too loud.
Festive.
They're too loud.
Sorry. Man, you are sounding very old manny. Now my dog hates him, and I feel bad for her. We need to.
Duncan's with me. It's just it sounds like you're in a war zone. They're the ones that they sell to people for their house now are so.
All right, we get it. You don't
and
like fireworks. You don't like fireworks. All right.
Overrated.
I watched. What did I watch? I didn't see anything good on the airplane. In fact, I think I saw something really bad. I rewatched Blood Diamond. Not rewatchable.
I rewatched it too.
It was on the rewatchables, and I saw Blood Diamond in the theater. What year did that come out? And I just feel like
I liked that movie.
Oh, I loved it. Oh, 2006. No, I really like that movie a lot. It's just one of those movies that's so. It's just such a. It gives you such a visceral reaction. I don't need to rewatch it. I remember it.
Yeah, a lot
vividly.
of downer movies. It's hard to. They're not rewatchable.
Yeah, I remember it vividly.
Comedies are so much more rewatchable.
So The Mule.
Is that the Clint Eastwood one?
Yeah, it stunk relative to what it could have been.
Yeah, it was bad. Wasn't Bradley Cooper in that too?
So Bradley Cooper and Lawrence Fishburne are the cops tracking him down.
Yeah, it was a bad movie.
I don't know. It's just weird. It feels like there was like some really bad editing done, or the story was incomplete. It just doesn't feel like one of his movies. It stunk. It was watchable, but it was not.
I mean, the guy's like 85 years old, isn't he?
Yeah. Listen, no excuses.
All right, I don't remember what your feelings were on The Bear season 1. Did you watch it? Like it? I don't remember.
So I did
you,
not.
You weren't on board.
I did not like season 1. However, I'm like a huge outlier. And whatever, it just didn't resonate with me. But I'm excited for season 2 because you and everyone else seems to really love it. So I will watch it.
I was pounding the table on season 1. I said it was the best new show of last year, and
Yep,
I thought it could have been a 1-season show. Like the way they ended it, it was an amazing ending. And I'm like, I don't know what they're gonna do for a second season. It's gonna be weird, and I think it not hyperbole. I think it was one of the best seasons of television I've ever watched. Like the first 2 or 3 episodes were kind of the same as last year. And it's like, okay, they're sitting on the same beats. And then the second half of the season, they have a Christmas episode that was just a murderer's row of cameos. It's like, whoa, that person's in it. Holy crap. It was like an hour-long episode. It could have been a movie. And then the next episode after that episode was just like on fire. It was amazing. The next episode after that was even better. The cousin Richie, I love, he has a line. He's talking to his 5-year-old daughter. And he says, honey, I love you. I'll see you later. He's dropping her off at the mother's because they're divorced. And he says, honey, I just want you to know, I love Taylor Swift too, but I just needed a break. And I said that exact same line, I swear, to my daughters in the last weeks because they've just been on a Taylor Swift kick. And it just, I don't want to oversell it because someone's going to watch it and say, oh, what are you talking about? But for me, this is my favorite show I've seen in a long, long time. And it kind of feels like it could have been a movie because it's just like these short 30-minute episodes, but I'm pounding the table on this one. If you're a Ben recommendations person, I couldn't believe like this show went up another level. That was just like, I don't know. It was awesome.
So you liked it?
I freaking loved the last 5 episodes of this season were just on fire. It was
All right,
so
I will
good.
definitely watch.
All right. And I don't know if it's a Michael show, but the thing that you get out of thrillers, like this is a very chaotic show, like the cooking stuff. I think the thing that you like out of the horror movies that like makes you feel uncomfortable, like this show has moments where it really makes you feel uncomfortable. And I kind of like that part of it.
Okay. All right. By the time you're listening to this, you will have hopefully enjoyed a very nice 4th of July with all the great fireworks and other things that this country does so well.
Hey,
Send us
I'm fine with sparklers. We're gonna do sparklers. But I don't need a I need a bazooka in my backyard.
Quick plug. Josh and I, when we were in St. Petersburg, did an episode with this incredible guy who was, I think he was a Navy SEAL or Green Beret, I can't remember, but he now owns a distillery, and the bourbon is called Horse Soldier bourbon, and it's incredible. We did an interview with him and Cheryl Penny about just his experience and entrepreneurship, and it was exciting. That guy is amazing. So
the people who have gone through those programs and have served like those people blow me away. I think those people are 10 times more impressive than any CEO or entrepreneur.
So they made a movie about this guy's battalion, and what's his name? Chris Helmsworth was the leading man. So these dudes literally they took Afghanistan via horseback.
Just badass.
Like, literally had horses. Yeah, totally. All right.
Hey, wait, one more plug.
Yep, please.
Our Chris Hutchins Talk Your Book.
Oh yeah.
Up on Monday too, all about credit cards and credit card rewards. Michael learned what Google Flights was, which was great.
Dude, I learned a ton in that.
Yeah. So if you're a big life hack person, credit cards, Chris is very well educated in this and very well versed, and it was a good one too.
All right, animalspiritspod@gmail.com. Thank you for listening. Happy 4th, and we'll see you next time.